Let's talk about something that I see a lot of people do lately. This idea that you're going to move to a cheap market and finally get ahead financially. You know what I mean. You're scrolling through listings, you see a 3-bed, 2-bath somewhere in the Midwest that costs less than your rent in a major city. And suddenly, you're having a full-on identity crisis like, am I an idiot for staying here? So now you're on Zillow 3 times a day, you're watching YouTube videos with thumbnails like why I left California for a better life, and you start thinking that maybe that's your move too, because on paper it sounds smart. Lower cost of living, more house for your money, less stress. But here's the cold truth that no one's putting in the sales pitch. Affordability doesn't mean prosperity. Look, I'm not knocking the idea of being strategic with your housing expenses. That part makes sense. What I'm knocking is the belief that moving to a cheaper market is automatically going to solve your financial problems. Because here's what actually happens to a lot of people. They trade in a high-cost lifestyle for a low-growth future. And it starts with income. Yeah, your mortgage might be cut in half, but so is your earning potential. You leave a market with opportunity, infrastructure, job access, networks, and you move somewhere that's cheap because no one wants to build there. You didn't outsmart the system, you just took yourself out of the game. Let me give you some real numbers to put it all into perspective. According to the Bureau of Labor Statistics, the average salary in California is around $76,000 a year. In West Virginia, you're looking about $51,000. In Mississippi, about $47,000. So yeah, your house is cheaper, but the opportunities to actually earn and build wealth also cut. Probably more than you realize. And what's wild is that people rarely factor this in. They look at the house, they look at the cost of groceries, they even look at the gas prices, but they don't look at their future. They don't look and ask, will I be able to grow here? They just ask, can I afford it right now? And that's how people trap themselves into a place they never were meant to stay. It's how you go from dreaming about freedom to waking up 10 years later and wondering why nothing's changed except for your zip code. And let's not forget the resale game, because everyone just assumes they can always just sell later. But cheaper markets actually stay cheap for a reason. They have slower growth, less demand, and fewer buyers. So when it's time to cash out, you might find out that nobody's rushing to buy your great deal that you thought you scored years ago. Redfin data shows that in counties with population loss, over 50% saw home values either flatline or drop entirely. So while you were banking on a smart financial move, what you really bought was a stagnant asset in a place with no velocity. And here's the kicker. Your exit strategy disappears the minute the local economy stalls. You're not just stuck in a house, now you're stuck in an area where your income is limited, your buyers are few, and your options are shrinking. So yeah, moving somewhere cheaper can make sense, but only if you thought about the full picture and not just the mortgage payment, but your career, your cash flow, your lifestyle, and your future upside. Because the goal isn't just to reduce your expenses, it's to grow, to build, to win long term. You don't build wealth by cutting costs until you bleed. You build wealth by positioning yourself where the ceiling is high, the exits are clear, and the growth is real. And sometimes the market that's more expensive today is actually the one that's giving you the best shot at financial independence. So before you move to save a few $100 a month, ask yourself, is this the decision based on a vision or just fear? Because cheap living isn't worth much if it comes with cheap future. This is Thrive Network. Hit subscribe, tag a friend, comment below, and we'll see you on the next one.